Well, are we seeing a comeback again like yesterday in the grain markets? You be the judge. Let's take a look at what's going on here in the corn market first. Remember how we had a lot of pressure early. Well, we still have quite a bit of pressure, but it's off of its earlier lows by about a nickel now. We have July corn down 9.5 at 7.62 3/4, and you have December down just 4.5 cents now. That has come back about 9, almost 10 cents now from its earlier low this morning. Meanwhile, look at soybeans. July now 24.25 higher at 17.05 after a low of 16.67 and now we're within 2 cents of our high of the day. What a rebound there. November now up 17.5 cents. This grain market is not for the timid, that's for sure. Speaking of which, look at the ranges in the wheat today. Chicago, July, 11.42.5 for a high last night. We had a low this morning of 11.15, and now we have bounced back to 11.40 Now we're down only 8 cents. It has come back 25 cents from its earlier low this morning already. Kansas City wheat on July, now down just 1/4 cent. Well, that doesn't tell the whole story. We're at 12.33. after hitting a low this morning of 12.06 3/4. So there you go again. That's another 27-cent comeback or so. Spring wheat trade, you have July now up 3/4 at 12.81 1/4 and back within about 2.5 cents of its high of the day. In the cotton market, you have that July contract 406 points lower today at 141.10. Remember, it was about 300 points higher yesterday. December down 180 points at 122.79. Robin Cross joins us now, and he is one of the bravest souls I had the privilege to meet as he works with the lumber market, and he is with StoneX in Chicago. The lumber market has fallen on hard times this week. Robin, tell us what's up.
Good morning, Marlon. Thank you for having me. Bravest or craziest? I'm not quite sure. I haven't figured it out in a quarter century, but I'll let you know. So we have, it's nice. The market's actually up today. So 670.10. That's up 18.30 with 58 trades. So, decent volume for the first 19 minutes, all things considered. September lumber doesn't even have it open yet. 650, 620 with settlement. That's about where the market's looking today. For several weeks, I've been warning lumber traders and our RFDTV viewers of a potential major correction to the downside. There are several factors for this fear. Let's just go over a few of them. First, Jan expiration, March expiration, May expiration lumber all had massive ranges of several $100s, right? Both a premium and a discount on either side of cash, giving, all types of traders, hedgers, and speculators and everything in between a chance to do what they need to do on either side of the market. But the one consistent pattern we had during the last couple days of the previous 3 expirations is the shorts tended to overstay their welcome. And we would expire closer to the highs of the range with the exception of March. That actually finished near the lows of its range. And that was your very first warning shot kind of fired to the market that a major correction was on the horizon. The bearish news of high interest rates, massive inflation, and uncertainty finally really outweighed the bullish sentiment of the market. Don't get me wrong. We are still very underbuilt in housing, but, price, Marlon, dictates all action, right? So still pretty decent demand. But, and they were still kind of like embracing the supply chain issues and transportation issues to kind of keep prices inflated, right? That was the driving force of the market for like the last 6 months. But as I always say, which you probably remember, I've probably told you this for 4 years in a row, that July lumber is the great equalizer of spring lumber rallies. It always is, for lots of different factors, mainly because a lot of guys, go into vacation land and they just don't want to be stuck with a whole bunch of inventory. So it's always been that way since, as far as back as I could remember, right? And so last week, it was more technicals than it was fundamentals because July expiration is so far down the road. That's what's really driving the market is the technicals, right? So last week, I warned that a close under 750 because we had 6 previous swing lows there. So if you finally took that out, which we did, I figured it was going to be an instant $100 bill, which it was. So we took that out, moved the market all the way down this week from Thursday to Thursday into, a swing low of 636. So we literally took, you got almost $120 payday instantly from that close. But make no mistake about it, 650 and the 636 swing low. So from 650 to 600, if you remember, that's been my target forever for the downside. So we just got to where I really thought it was going to go. But I think with an $87,000 discount, $790 off the high from March 4th, I think traders should take full advantage of this break. The market's still very oversold, and with cash markets so much slower to correct than futures, it might be some time before you're able to buy that stuff in the streets. But in the futures, you could take advantage of a 60% off sale that we're having here today. And I think if we do get a bounce, just to ad-lib a little bit, 750, considering we had 6 swing lows there, that's going to be your first stop to get through. So we couldn't even talk about any positive lumber. We got to get through that first. So that's your target out there if you're counting. And then lastly, volume and open interest is still low, and that's obviously all based off of the fear-based market, right? I'm seeing open interest still hovering around that $2,300 level, and daily volume this week and last week were the 2 lowest weeks of volume we've had for this entire year. I don't even want to talk about the numbers. They're just really pathetic. So all I got to really say, Marlon, is stay positive, continue to look for no-brainers, and I guess keep on rocking, and thanks for watching.
Yeah, I hope you have a tremendous holiday weekend coming up here. Just to remind everybody, there will be no ag trade on Monday because of Memorial Day. So the trade will get a 3-day holiday weekend. Robin, thanks so much for all the information. As always, you can tell that the housing market is slowing down. That's for sure. Robin Cross of StoneX in Chicago, I'll run down our livestock trade for you when we come back in a moment.